My MLS number.
Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today, for a Wednesday, June 16th, 2021, we have our panel for all you first-time listeners or viewers. We have Becky Alley, who is in the top 1% of all originators in the United States of America. Welcome, Becky.
What's up, everybody?
And alongside of her, we have John Kolb, who is also number 1% of all mortgage originators in the country. John Kolb, how are you?
I'm well. Hello, everyone. Thanks for having me again.
And the host with the most, Mr. Harvey Freed, the host of the Hardcore Mortgage Real Estate Business Show, co-creator for the last 21 years. Harvey Freed, how are you?
Very good. Good morning, everybody.
Good. Special guest today is Joe Muck from Next Home All Pro Realty. Joe is an expert in the mortgage. I'm sorry. See, there you go. I told you my voice is messed up today. It's a good thing it's a podcast and we don't have to start over. An expert in the real estate market in southeastern Michigan. Joe is always filled with knowledge, and you'll hear in his explanations, he is very succinct, very knowledgeable, extremely intelligent. Good morning, Joe.
Good morning, man. That was a hell of an introduction. I'm a little bit afraid to follow that up. Can I log off now?
Well, I read it just the way you wrote it for me.
Oh, yes.
Perfect.
I mean, He is pretty knowledgeable on the mortgage side of things. He's absorbed quite a bit, so he's definitely a well-rounded agent.
Well, I would like to attribute that, Becky, to you because I'm sure he's learned a lot from you.
Oh, yeah. We rub off on each other. It's fine.
There you go. Well, good. The podcast today is brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage, equal housing lender, NMLS number 2289. We are, again, an equal housing lender. We are licensed in all 50 states, a national company with a local flair in capital mortgage funding. So whether you're getting a mortgage in Washington State, Florida, Maine, or Michigan, we can help you out. We've only been doing this now for 5 decades, so we do have a little experience. So let's jump right into it, Joe. Current sales, Joe, in your market. We all know that the market has been red hot. Since the pandemic shut us down in March of 2020, here we are in June of 2021. There's been this pent-up demand. The market is hot. Let's hear your take, Joe, on specifically your market. What's going on? Is it still crazy out there? Because there are some conflicting reports, and that's why I want to get your take.
Sure. Well, and so overall, I'm focused in the Oakland County, Livingston County area, that South Lyon, Novi, Brighton kind of encompassing area. And it's absolutely insane. And it's unpredictable. It is truly unpredictable. I can send you one address that literally sold for $125,000 above asking. And I can send you another address on the same block that sold just above asking, but for less money than this house overall. And yet it's actually a bigger house. And so, it's hard to gauge when it's going to be, crazy times, but it is definitely still on fire. As long as the house is appropriately priced, it's likely to sell within a handful of days or opening day or what have you. It's crazy times.
But Joe, isn't that really in all markets? If the house is appropriately priced, it's going to sell?
Yes, absolutely. In our MLS, which really encompasses quite a distance, the average right now is less than 4 weeks, and that's going to include inappropriately priced homes, right? That's going to show you the houses that are fixer-uppers, but they were priced as though they've already been flipped. That's going to include, $2 and $3 million houses, which generally do take a little bit more time. So yeah, that's the case in the entire marketplace. It's just no different. And, I'm looking at houses on average price point above 400,000 that are selling with multiple offers, $20,000 and $30,000 and $50,000 over asking in many cases, but not all.
Yeah. Hey, Becky Alley, we're seeing that in our daily travels as we talk to our realtor partners like Joe Muck. We're talking to our buyers every single day. We have multiple pre-approvals. We're seeing many offers, 25, 30, 50, $70,000 appraisal guarantees, right?
Yeah, I mean, I kind of want to touch in, and I know, John really wanted to jump in on that last topic, as far as what is going to negate, on the same block, such a
Yes.
difference. What, like, was the one house, updated? Was the other one not? I mean, because that is very interesting to me that there really is no rhyme or reason for really what is going on in this market. So I kind of want to hear what John had to say about that, because he got really excited.
Oh yeah. I mean, I thought that was like a perfect little like test subject microcosm area. And so, I mean, the house that sold for less was bigger. So I guess that gives us a little, what were the differences in the home? Was the home that sold for more really updated on the inside? I mean, this is like, like I said, a little test subject in the same neighborhood. And I think it's great info for people to really understand and need to know.
And I think the biggest thing, sometimes it's not good to be the big fish, right? So when one house was over 3,000, but the other was over 5,000, it's definitely possible. A lot of folks walked through a 5,000 square foot house and just said, this is just too big for me. We see plenty of folks that quote downsize from a 5,000 to a 3,000, and really they did take a lot of space off. It's just that they're still in a pretty big house by most standards at 3,000 square feet. Those were, I think, were the biggest differences. Overall, they were both in similar quality overall. Yes, I could point out specifics. Oh, I really loved this about this one or this about that one. But I do think the timing, is within a month or two of each other, plus the size. And I really think that we've been in a great market for years, right? I mean, pretty much almost a decade now. But it's been this acceleration that we're in right now really kind of kicked off right after the holidays, right after January. I mean, to the point where we're at now, where it's like you can put a $75,000 above ask, no inspection, no appraisal necessary. Oh, sorry, wasn't accepted. We had a better offer.
Like, how do you get better than that? It's crazy.
It is. And the really interesting thing, and Becky, you and I know specifically, if these guarantees and these prices aren't done the right way, then the deal falls apart still. Mm-hmm. And I say that Becky knows because we literally just closed this week on Monday with a client who our offer ended up being accepted after a deal fell apart. And it fell apart even though they had the full guarantee because they had some other issues with their mortgage process. And so what happened? The agent reached out to myself and said, are you guys still interested? Your lender reached out to me and talked to me. You've reached out to me and talked to me. And you guys aren't the next highest offer. In fact, you're the lowest offer. But I think you're going to close. And that's important to my seller right now.
So Becky, isn't it all situational though? Isn't it really situational, whether it's a buyer's market, a seller's market, up, down? And Joe's exactly right. This is the 10th year. So he was correct. It's been a decade of a seller's market. But if the product that's on the market isn't up to speed, it really doesn't matter if there's one next door or down the street that is better. That one's going to sell quicker. Isn't that always the case, Becky?
I mean, you would think so, yes. I mean, but, it is, like you said, there is no really rhyme or reason to why, some offers are being accepted. So, for example, like what Joe was pointing out, we weren't the highest and best, but they needed at that point in time confidence that the transaction was going to close. So buyer's confidence and seller confidence is going to trump that eye candy initially. So, of course, yes, they're going to take that, higher price point always, but I feel like more transactions are starting to fall apart because these appraised values and they're over, like these appraisal guarantees, when it really comes down to it, they're like, oh crap, I really have to do it no matter how much I've educated them, no matter how much Joe has educated them. When that appraisal comes in low and they really got to cough up that 15,000, people are starting to freak out. And then the next person in line is stepping up. And because people are going so crazy, they're doing sight unseen still because, these houses are going off the market so fast. So that's where we kind of preach, like, don't get crazy out there. Sometimes staying that course and just being even keel the whole entire way is going to set you apart because you have an agent like Joe Muck that's going to be following up. Hey, did this transaction close? Because my seller or my buyers are still interested in this property. And look what happened. We got a closed transaction under 30 days. Good to go.
Yeah. Hey, Harvey Freed, I had an appraisal guarantee. It was a $70,000 variance. Purchase price was $460. The appraised value came in at $404, but he had it covered because he put in there $70,000. I see Joe laughing because yes, Joe, I thought it was insane too. Absolutely insanity, but he's got it there because it fell within the $70,000. It was $56,000 off. Harvey Freed, one of your favorite subjects is appraisals. What are you seeing in the appraisal world?
Every time we talk about them, bad things could happen. So we've been lucky. Most of the clientele that are overbidding on these homes, 5, 10, 15,000, we're generally getting pretty lucky on those because the market, the comparable sales are in the neighborhood. But these 50, 60, $70,000 appraisal guarantees, again, here we worked with one, 350. We did 2 appraisals. Neither one came in over 300. It's an education for the buyers. And it's really showing us what real estate agents are the top 10% and really know how to put these deals together that make sense versus the 90% are slowing the market down. And Joe made a couple good points up there. A couple things I picked up on, Joe, is really it's not the highest that's the best offer. It's the deal that'll close and all parties walk away where they're able to move on with their life and feel like they won. It was a win-win. So we like this. We like a balanced market, Harry, and hopefully more homes will come in the market. Again, we're midway June here. So we're hopefully that we'll see more and more homes hit the marketplace. Joe, I was going to ask you, I feel like there's a rush coming in August and September where there are some families that right now are enjoying the freedom because of the pandemic, but maybe they'll get more serious in July and August, closer to the school year as we see kids are going to be back in the classroom.
Right. Well, and I've got buyers that are sellers. On the seller side, they're like, they love it, but on the buyer side, they're afraid, right? And so a couple of them want to move because of schools. This pandemic brought about, people really looking into how school systems are functioning. And some people are, really happy. Some people aren't, right? And so some folks want to move now because of schools. And to your point, they're kind of able to sit back because it's June and they're saying, well, I've got some time and this and that, and the market's hot. But I think you're right. In the next 30, 45 days, they won't have as much time because most schools in Michigan will be going back right after September, 5th, 6th, something like that. And, 30 days out, we got to start moving. And so I do think that there's some inventory to hit the market. I do think there's going to be, a little bit of a chill, if you will, but chill from 4 weeks of inventory to 6 weeks. It's a very relative term, right? So maybe we have more inventory, but it's not going to be anything that eases us up anytime too soon.
Hey, Joe, I'm going to let John Cole speak to this next topic because he's our second home up northern Michigan king, spends a lot of time up there. And it seems that the pandemic has spurred a lot of second home, vacation home buying. All right, we're seeing a significant increase as chronicled in Mortgage News Daily. That second home market action is going crazy. John, you're on I-75 a lot, almost every weekend, up and down. You've got really your finger on the pulse of what's going on in the second home market in northern Michigan, or as we call it here in Michigan, up north. John, what do you have to say about that? What are you seeing? What's the activity like even around where you're living up north?
It's crazy. Houses are flying off the market. And actually the construction is out of this world right now. People are buying up lots and building homes and or adding on. So it's good to see. It's busy. It's a way of, with all of this new knowledge that everyone has about working virtual, you don't need to be in the office. So you can go up north, spend a week, 2, 3, and work while your kids are in the backyard playing in the water. And it just gives them an outlet of something else to do other than sit at home and put kids in daycare or whatever they need to do. So it's getting busy. It's going to be a crazy 4th of July weekend up there. And we're excited to see it. But at the same point, we want to make sure that everyone has understandings of what it really means to be a second home owner. It's not just you pick up a mortgage and that's it. There's upkeep, there's dues, and whatever you need to, gas expense, whatever it is that you need to do to travel up north, you have to make sure you're understanding before you just jump into let me buy a second home and see how it works out.
Yeah, Joe and John, before I get into new construction with Becky Alley, I'm going to ask you what your predictions. This will only be one of the predictions I'm going to ask for you guys today. Joe and John, give me your prediction for second home market. Is it going to continue like the current primary home market is, or is it going to slow down shortly? What do you guys see in the second home market?
I see it slowing down earlier than the primary home market, obviously. But I don't see it slowing down anytime soon. I would say that right after Labor Day, you'll probably see a big slowdown because there's no real rush to be up there anymore. And people will probably want to see where the real deals are in what areas. So I see it slowing down here in the fall. But not like it won't be as the primary market will stay busy.
Joe, your prediction on that?
I agree, pretty much 100%. I feel like people like in Michigan, we go north or even maybe west, toward Traverse City to enjoy the summers. Some folks obviously like to enjoy the winters, on Higgins Lake or the UP or something like that, but most people enjoy the summers. And so I think it'll slow down a little bit after the holiday, Labor Day. And, maybe people almost try to force their own market conditions by saying, if I wait and you wait and you wait, it'll be a little bit better for us all because there won't be as much competition. So.
Yeah, Becky Alley, a couple of weeks ago, we had a situation not unlike a lot of people around the country where we saw really what I would call at the 11th hour, a builder going ahead and raising the price on a home while the house was under contract because of lumber prices. I think that most builders have it in there and they're eating the cost. At least that's the report that I'm getting. You and I had a different situation. I was on the phone with a friend of mine yesterday who owns a lumber yard. You would think he would be jumping for joy, Becky and panel, because his business has been really, really strong. Here's the problem. He can't get any product. He can't get any wood. He can't get any pavers. He can't get anything that his builder clientele needs to build these houses and service these clients. What do we think is going to happen with all the new construction going on? Because I can tell you this, the sentiment out there in the builder and the lumberyard world is that they can't get enough product to build these houses with that. There's such a pent-up demand. Becky, what are you seeing?
The same. I mean, so like what happened, if you guys didn't catch it on, when we talked about it last, was new construction. It's very important to read your contracts, right? So in this situation, the builder had it in the contract that he could, there could be a price change given for product or cost of goods, et cetera. So we literally had the appraisal done. It came in at value, which is beautiful, right? On the same exact day, I got a change order request for $15,000. Okay. And the builder stated that it was because the cost of lumber had exceeded their original expectations. The prices aren't locked in. They're subject to whatever increases. So they're pushing it on to the client. Okay. So that's going to start happening more and more and more. So fortunately, we were able to get the change order. We did send it over to the appraiser. They did consider and they did find additional comps to support that higher value. So we were able to bridge the gap, not 100%, but pretty close. So the buyer worked it out. We also had an opportunity to maybe adjust what he was bringing to closing, so he wasn't out that extra $15,000. So it's important for you to read your contract. It's also important for you to be with a really good lender that's going to be able to look at it from an outside perspective to kind of make these adjustments. So that way, because everyone has just an extra $15,000 they weren't accounting for just laying around, right? If you do, YOLO, that's great for you, but not everyone is in that boat, right? So it's important to be a part of that discussion and making sure it makes sense. So as far as the builders, the costs are getting so extreme for them that I feel that they're not going to have the capital to really build the majority of these homes, in these bulk that they originally were anticipating. I feel like some of these builders, I deal with the agent, she's right in the backyard, literally their preferred listing agent for some of these new constructions, and they only can afford to build 5 houses at a time. without having to push that. And what I mean by that is they can build the majority of it with certain set deposits from the buyer, right? So you give them 30,000, they can build you a house. We step in, we give the rest, right? Well, they are capped now at 5 because of, where they're at. So some of them are even doing a lottery where like you put your number in, they pick you randomly, and you're the one that gets the next house. I mean, and that is, we were hoping that new construction would possibly offset some of this inventory lack of inventory that we have, but they're kind of in the same exact boat, and it's not really offsetting anything for anyone, to be honest.
Yeah, I would agree with that because it's very, very tough in the new construction market right now, and getting the product is really tough. Joe Muck, I was on your website earlier today, and for those of you who don't know, Joe Muck, next to him, All Pro Realty. Go to his website. He also does a podcast, Cup of Joe, right, Joe?
Yeah, that's right.
Yeah, it's a
Cup
good
of
time.
Joe podcast can be found on Spotify. Becky was on the podcast, and I will tell you this, Joe, you have significantly increased, it looks like to me, the amount of listings that you have. For everybody out there in this market, what do you say the average turn time on a listing is? And I know people are panicking when they see a house on the market for more than 7 or 8 days. It's kind of, the expectations are unbelievable. But right now, share a little bit of what's going on, the average time, and you touched upon a little bit earlier of the days on the market of your listings. And again, it's all situational, but share it.
Sure. So mine are 2 or 3 days. And really that time frame is to appropriately allow showings and or, go through offers. I list almost every home as coming soon. And so they technically, when they're coming soon, they're on market, but nobody can go into the house. You can only look at pictures and videos. So once it actually hits the market, say, for example, on Friday, people have already put in requests, So if you were planning your Saturday around going to see this listing, unless somebody just throws an absolutely ridiculous offer that we can't possibly turn down, I want to give you the chance to go see it. It's best for you and it's best for my seller, right? Because you might like it more than Becky liked it. So you might pay more than Becky paid. Coming back to the $75,000 over ask that doesn't get accepted. Well, it didn't get accepted because somebody else wanted more and put down a bigger ask or bigger over ask, with a guarantee. So mine are seeing 2 and 3 days, mostly for those reasons. To be fair, there's been a couple that it's been 5 to 7 days, but man, it's been a while since I've seen 2 weeks, to be honest. And some of that's the market, some of that's me, some of that's the way that we prep the homes. But it's just, it's definitely a good time for sellers.
Yeah, that is the picture. That's what's going out there. John, I saw you kind of, we're wincing a little bit because when we hear 2-3 days, then all of a sudden it goes to 5 or 7, we're shaking our head because, we've seen these kind of things happen, but I think people have to temper their expectations. But we have to prepare them to win that offer, to win that house if they really want it. So, John, I saw you we're shaking our head because we still can't believe this euphoric situation that we're in.
Right. I mean, we're spoiled, just like we were spoiled with interest rates for such a long time at 2.5, 2.75 on a 30-year fix. 2-3 days on the market, 5-7 days on the market. Hey, if you could give me 5-7 days on a market as a real estate agent for the next 10 years, sign me up all day long. Right. It's a winner all day. So, I mean, and yes, we're getting spoiled a little bit, but Joe's a seasoned professional. He's going to know how to bounce back once they start sitting on a little bit longer. Just like we're going to bounce back and when rates go up and figure out where the next avenue is for the clients. So we've been doing this all been doing this a long time. We all know how to adjust based upon market differences. But at the same point, we need to make ourselves stand out, like Joe said, with what he's doing to show houses, list houses, and coming soon versus actually being on the market. So it's good info. It's great knowledge that we have another very professional real estate agent out there that is doing things the right way to make sure his listings and his buyers are well taken care of.
Yeah, that's a great segue going into our last segment, really, of this podcast for a June 16, 2021 Hardcore Mortgage Real Estate and Business Podcast brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number for all you first-time listeners and viewers. Last topic of the day goes something like this. All activity right now, purchase, refinance, really busy. If you're planning on refinancing or purchasing a home, these rates are not going to stay this low. So I'm going to ask our panel, starting with you, Becky. The Fed is meeting. They're going to meet. When will they start tightening their current monetary policy, Becky? Because they will. Is it going to be sooner rather than later? And, predictions are like whether people like we're 50% right, we're 50% wrong. But I just want to hear your take on what's going on because, as previously stated, mortgage interest rates have been low for a long period of time. It's been very, very favorable. Sooner or later, the Fed is going to have to start tightening the current monetary policy. What are your thoughts on that? Or don't we really care?
Well, I feel like every time I speak on this, and last time with Joe, like I always end up jinxing myself. So I do hesitate, but obviously my best advice is if it makes sense for you right now, do not hesitate. If it makes sense to refinance, let's talk about it. If it's time to buy, take advantage of the buying power because obviously if an interest rate is 1% higher, that's less home that you're able to buy for yourself. And obviously with the way that these prices are inflating, you need to be in a position to buy more house because if you're selling for top dollar, that's great, but you're also going to be buying for top dollar, right? So these lower interest rates are going to allow you to have more home that you can afford. So it still makes a lot of sense to do a cash out refinance if you're not going to be in the seller or buyer's pool. Customize your house however you want it. The rates are, they're an ebb and flow. They've been pretty steady. We've been very fortunate. They have been pretty, around the same time with a couple, burp ups here and there. But if it makes sense, do it now. Don't wait because you're going to be sidelined talking about, I wish I would have and wish I could have. And we talk about that too. So give us a call, give whomever a call that you trust. And if it makes sense, I would suggest that you entertain it.
Yeah, Joe, in the real estate community, what are you hearing about interest rates? Is it as big a deal to you as it is to us? I mean, so if it is, what are you thinking about the Fed tightening and really tightening their current monetary policy? Is it a big deal in the real estate community?
It is because obviously we hear constantly that we're in a bubble. And we've been hearing it, and this is the funny thing. I bought the house that I'm in right now almost 8 years ago. Like next week is 8 years, okay? And when I bought this house, I was told that we were in a bubble. And here we are 8 years later, and I'm still being told that we're in a bubble. And the Fed is aware of that too, right? So they are cautiously approaching these changes so that people understand we're not in a bubble and so that we don't, create a bubble really, right? Because if they just drastically changed rates and all of a sudden, everybody was paying 6% again, everyone would panic. So it's a slow process and people do care about the rates because they think that the difference between 3.5% and 4% is, going to destroy them. And while it is obviously significant, it's normally not life-changing, right? We really have to get to significantly higher rates before you start seeing drastic changes in most people's ability to purchase.
Mm-hmm.
Agree with that. John Kolb?
I apologize. I have got an email that I was concentrating on for a closing that's happening this afternoon and was not listening to the question. My apologies.
The question is this, and we appreciate your candor and your honesty and your lack of participation in the last 3 minutes. So we appreciate all of that.
Me and Harvey.
Well, Harvey just checks out. I mean, I'm ready to go to Harvey, but then all of a sudden he's not on the screen anymore. But that's just what he does. It's a behavioral issue, but we all have our own behavioral issues. So at any rate, John, the question is this. At the Fed, they're going to meet. When will they start tightening their current monetary policy? Because we know they will. Rates are very, very low right now. Can they continue to stay really low? Or do we think sooner rather than later or later rather than sooner that the Fed's going to tighten the monetary policy?
I'm hoping that they can keep rates, keep them low. There's no reason that we need higher interest rates. It doesn't do anybody any good. If the banks need extra funding to offset the low rates, it's a heck of a lot cheaper than going through some of the stuff that we've gone through in the past with bailouts. So, keep it like Switzerland, where the rates are kind of steady and never change. And, obviously ours are going to change up and down here and there, but we don't need to go back to the 6%, 7%, 8% interest rates. It doesn't do anyone any good. And, it's just going to put a slow on everything. So we're in a good spot. The economy is doing great. Interest rates are doing great. The real estate market's doing great. Why not keep going with what we got instead of justifying your existence by changing something to see everybody freak out?
I love that term, John. J-ing themselves, justifying their existence. Well, there are a lot of people out there think that this inflation that we're going through right now is not transitory. They think it's here to stay. I don't believe that. My take on this, and nobody's asking me, I did not get a call from the Federal Reserve. I believe they're going to start tightening quicker than everybody thinks. I believe that there are people out there that are saber rattling the panic, and they're pressing the panic button on inflation. We're going to go back to 1979, 1980, 1981. I don't believe that's true. The however is this: enough people make enough noise, and the Fed is going to go ahead and start tightening. The 10-year Treasury right now is at 1.5. Last year was at 0.47. Okay. I think when it breaks through the 1.5 mark, you're going to see rates start to go up again. And I think it's going to be sooner rather than later, which takes us back to our previous topic of, what are you waiting for? If you're looking to buy a house, call Joe Muck. If you're looking to get a mortgage, call Capital Mortgage Funding, Becky Alley and John Kolb and everybody here. I mean, what are we waiting for? There is no time like the present. You've heard that your whole life. You can't go back in time. People that wish they should have bought the house, I talk to a lot of people on a daily basis. People are telling me they should have bought this house 2 years ago. They should have bought it 3 years ago. They should have bought it last year during the pandemic, because the house has gone up 20, 30, 40% right now. So you can't wait, because we know that things have to change. One constant is that things change, and what's going to change is the market's going to change. 10 years in a seller market, it's not going to be a seller market forever, which means sellers aren't going to be able to sell their house at top dollar. Rates aren't going to stay this low, which means what? You need to refinance that house, take care of your toxic debt, pay off your pay off student loans if you have them. Just try to use our financial expertise, Becky Alley, John Kolb, and Joe Muck's real estate expertise into making yourself have a better situation. That's my last rant. But Becky, I'm going to let you, then Joe, then John wrap it up, and then I'll go ahead and take care of the business of the day, and we'll make sure everybody gets taken care of today, and all our clients out there, and especially all of Joe Muck's clients. So Becky Alley, have at it.
I mean, I still can't believe it's halfway through June. I'm still digesting. We're like literally halfway through this year as of today. So, to reiterate, if it makes sense to do any kind of transaction, whether you're selling, you're buying, refinancing, you're not going to know until you actually start having the conversation with a professional, right? You can drive yourself crazy with a million different, could I do this? Could I do that? But you're not going to really have those answers. You're just going to be bouncing things against the wall. So use this as a sounding board, whether it makes sense or not. We'll help you make that decision. We're not going to make the decision for you, but we will give you our honest opinion, right? Same with Joe, right? Joe is not afraid to say no. And he's also very biased. I mean, he's unbiased, I should say. He's very neutral. He's going to give you a genuine assessment of yes or no and what makes sense for you. He's not pushy. That's why I love working with him. He's so knowledgeable. He knows what he's talking about, but he's also going to just give you his opinion. He's going to talk to you like family. And to me, that is why he's someone that I work with very closely, because he has that same kind of perspective as I do. I want someone to, I'm going to treat you like I want someone to treat my family. And he's the same way. So if it makes sense, start the conversation, whether it's now or 6 months or a year from now. We're here to talk it out with you and make sure that we're putting you in the best position possible.
Yep. Joe Muck.
Absolutely dead on. Start the conversation now. If you haven't refinanced, look into it, because the rates might not be where they were this time last year, but they're still ridiculously low. They're probably lower if you haven't done a refinance in the last couple of years. And if you're thinking at all about getting in the market, have the conversation now. Understand why to or not to get into the market, why to buy or not buy, sell or not sell. We can't make these decisions like on a Friday night to list your house on a Saturday because you just saw a dream home that you didn't think was going to ever pop up. So if you think that there's a dream home out there and you'd pay X dollars for it, then let's talk about what that plan would look like. And if it takes one day or one decade, that's fine, right? But you can't plan too soon, especially when it comes to prepping for this big transaction, which is obviously a huge one. We always say it's the biggest one in everybody's life. So start planning early.
Excellent, Joe. John Kolb, you got the last word of the day, buddy.
I just reiterate what Joe and Becky and everybody has said. Let's, don't wait. I mean, there's nothing wrong with the amount of time that all of us spend in this business. We all have past clients and we all want to hear from you. So don't wait. Let's go. Free consultations are always available, and we're here for you to make sure you're making an educated decision. I tell people more often than not to do anything because it's the right thing to do. So why not ease your mind and get some real advice from us and then go from there.
Yeah, special thanks today to Roberto Beauchesne, our producer director. As always, he's the guy behind the curtain. And to Joe Muck. Joe Muck, Next Home All Pro Realty. And you can hear him on his podcast, Cup of Joe, on Spotify and other places where you hear podcasts, also our podcast. Also, always thanking Becky Alley and John Kolb, top 1% of all mortgage originators in the United States. Lisa Lawson, who couldn't be with us today. Lisa, we're thinking about you. Shout out to you. I know you're working somewhere. And Mr. Harvey Freed, wherever he disappeared to, poof. Maybe there are aliens and spaceships. Maybe they took Harvey away. We don't know where they
be
are.
Luckier.
But wherever you guys are, wherever Harvey is, we appreciate him coming on. So for Capital Mortgage Funding, Fairway Independent Mortgage Corporation, this is Harry Glantz on the Hardcore Mortgage Real Estate Business Podcast today for a Wednesday, June 16th. Join us for the Hardcore Mortgage Real Estate Business Show, heard every Saturday, hosted by Harvey Freed, Detroit's 97.1 FM. That's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, equal housing lender, NMLS number 2289 for a Wednesday, June 16, 2021. Everybody, have a great rest of your day.